Being in a drawdown is a very difficult thing as a trader. Losing 3 trades in a row while you're in a drawdown is even more difficult to handle emotionally. But that's exactly what's happened to us this week, and a couple of those losing trades were actually based on the same exact analysis we do here each and every Monday in our weekly market predictions. So the question remains, does this stuff actually work? Placing trades based on major structural resistance and support levels. We'll talk a lot more about that as soon as we get back from the intro and disclaimer. We'll define what it means for something to actually work, in parentheses, in the Forex market. And of course, we'll be taking a look at our predictions in the top 5 major pairs and going through a few different trade ideas we have on these pairs. So if you're new here to the trading channel, whether you are a beginner or an advanced in your trading journey, we probably have some training that applies to you. We have over 100 videos here on YouTube for free. And if you want to make sure you're alerted about the other free educational content we come out with here on YouTube, be sure that you hit that subscribe button. Go ahead and click that notification bell. While you do that, I'm gonna let the intro and disclaimer roll. Click that like button for us to help support the channel, and I'll see you guys on the other side. Welcome back, guys. Okay, so to answer the first question before the intro and disclaimer, does this stuff actually work? And what I'm talking about when I say this stuff is trading around specific major support and resistance levels. As I said, yesterday we had 2 losing trades in one day based on this type of analysis. So if that's the case, how does it work, right? Well, the answer to that question is yes, it works. And I'm not going to just say that without explaining it to you. Let me explain why it works, even though last night or yesterday we lost 2 trades based on this type of analysis in one night. The reason why it works is because our entire purpose when creating a strategy, when trading in financial markets based on technical analysis, is to create an edge or an advantage over that market. Specifically here, we're in the Forex market. And what is an edge or an advantage defined as? Well, it can be defined as many different things in financial markets, but in today's video, what we're going to talk about is having an edge that is winning more than you lose. So more wins, winning more than we lose, is going to be our edge. Does trading around specific major support and resistance levels win more than it loses? Well, that depends on the entry reasons you use, along with any other forms of technical analysis that you use as the condition for your trade. Without getting into too much advanced stuff and too much detail on all of that, the brief answer to that question is this type of thing works because it helps us to have an edge or an advantage. This type of analysis works because it helps us to have an edge or an advantage over the market. Just because you have an edge over the market, just because you have an advantage, doesn't mean you're not going to lose. It just means that you have an advantage. What would that be? So for instance, an edge or advantage would be having a 60% winning percentage. Well, guys, a 60%, 70% winning percentage leaves a lot of room for losing trades. So hopefully this clears things up. I've had a lot of different emails and comments from traders over the course of my teaching career of traders asking me, if this works, then why is it losing? Well, because you only have, let's say, a 60% chance of winning the trade. Therefore, you have a 40% chance of losing the trade. Tell me this, whenever the Weather Channel says there's a 40% chance of rain, does it rain sometimes? Yes, right? And the same thing applies for a strategy with an edge or an advantage over the market. If there's a 40% chance that you're going to lose, will you lose sometimes? The answer to that question, of course, is yes. So that's why this stuff works, guys, and that's how you define whether or not something works, in parentheses, in financial markets as a strategy based on technical analysis is, does it give you an edge? Does it give you an advantage over the market? Do you win 60% of the time when you trade it? That's a very brief explanation of that, but I don't want to push that too hard in this video because that would make this video quite long. So instead, now let's go ahead and move on to our predictions and our trade ideas on the top 5 major pairs here in the market, starting with the euro dollar. Okay, guys, so here on the euro dollar, what are we doing trend wise? Well, when it comes to trend on the daily chart, we are still in a period of consolidation, meaning there is no trend here. We had previously been in an uptrend, right? Looking left, we have higher highs coming in along with higher lows. So while in this period of consolidation, we're only looking for 2 different things. One of those things is for the market to get up to 1.2512, and on the opposite spectrum of that, we're looking for the market to get down to 1.2214 support. So those two levels are the levels we're going to be paying attention to for trading opportunities when it comes to based on our daily chart analysis. Now, if we take this to a smaller time frame, I'm actually going to show you guys a trade that we had here on the euro dollar last week in the EAP training program. So let's go ahead and go down to the 4-hour chart. And we actually talked about this in last week's market predictions video. What we were talking about is this area of consolidation right here. And we were looking at if this market got up into this area, we could look for some short trades. Well, instead of looking for short trades there, the market ended up pushing above this area. And what does that do for us here on the 4-hour chart? As I said, daily chart, we're still in consolidation, not looking for long-term trades because of that, right? But here on the 4-hour chart, we just broke structure resistance into a new uptrend. After that, what do you guys think we're looking for? Well, this same area that was important as resistance is going to be important as support. So these drawings just move the box over here, and then let's move the chart over. So what we did was waited for a pullback into that same zone, waited for an entry reason, and ended up getting a pretty good trade out of that area last week. I'll actually put a screenshot of that looking left to the alert we had on the euro dollar last week in the EAP training program. And again, guys, full disclosure, we do not win every trade we place in that program. We're currently in a drawdown, and I'm going to show you guys 2 trades that we actually lost using the same type of analysis so far this week. And the reason I want to point all of that out to you guys is because it's important to realize that trading is not only about winning trades. It's more so about having the psychological fortitude, the emotional fortitude and discipline to battle through periods where you don't win as much as you lose. Battle through periods of what we call drawdown. So let's go ahead and delete all of this, zoom back out to a daily chart. And really, again, guys, not much to talk about here on the euro dollar other than the major support and resistance levels around 1.2214 as support, 1.2512 as resistance. Not that I think this is going to happen this week, but we could see a push breakout above that level. In that case, we'd be looking for some long trades all the way up to 1.2784. And if this market turns around here, makes it back down to support, of course, there we'll look for some long opportunities. But if we break through that, we'll look for short trades all the way down to 1.2066, and that'll be the next place we look for possible long opportunities here on the euro dollar. Let's go ahead and move on now to our next pair, which is going to be the dollar yen. So here on the dollar yen last week, guys, we talked about this level 105.50 as being possible support yet again. We did acknowledge that this market was in a heavy downtrend, and we said that we would need a pretty powerful entry reason, like some type of double bottom entry reason, right at this level before we could go long. And we ended up getting a nice pullback into the 105.50 level like we expected, and a pretty good push out of this market of over 150 pips since then. So what I'm going to do is show you guys a short clip from last week's video where we were talking about this analysis, and then we'll come back to break down the dollar yen chart, talk about our trading predictions for the rest of this week. So take a look at this clip and I'll be right back. We did have a nice push off of this level of support. The only way I'll be looking for a trading opportunity here at 105.65 is if we get a nice retest, probably a double bottom on a lower time frame, possibly some RSI divergence, along with some other entry techniques that we use in the EAP training program. This will have to be... All right, guys, so as you can see from that clip, this market, although it did not do exactly what we thought it would, we really expected trend continuation and for this market to break into newer lows, did give us something that we came to expect. So the important lesson from this is the fact that you need to have a plan, an idea for any situation that the market throws at you, because it's an extremely unpredictable market, guys. Everything is unpredictable in every financial market. Your job is not to know what the market's going to do, but rather have an idea of what you're going to do, the aspect of your trading that you can control, which is just you. So have an idea of what you're going to do no matter what the market does. Here, we expected trend continuation. We thought we would break into new lows here on the dollar yen. But we said that if we got a retest of the 105 point, I think it was 65 at the time. This is literally 10 pips away, guys, so it doesn't really matter. But if we got a retest around the 105.5 area, we knew that if we got a good entry reason from that zone, we would go ahead and buy up this market based on our analysis. So although the market didn't do what we expected, we still put ourselves in a position to be able to profit from this market. And that was a really important mind shift for my own personal trading, was understanding that I'm never going to be able to predict exactly what the market's going to do, but that I'm better off having an idea of what I'm going to do when the market reacts. Because the way the market reacts is uncontrollable, but the way you react to the market is something you can control. So let's go ahead and continue our analysis here on the dollar yen. What are we expecting next out of this pair? Well, of course, again, we are in a massive downtrend here on this pair, at least here on the daily chart, and that analysis is going to stay exactly the same until we break above this resistance level. So what do I mean by that? Well, we have our move down, our lower high. Until we break above that lower high, until we get a breakout above this level, our prediction remains the same, that this market is going to continue lower and break into new lows. So with that analysis done, what does that mean for our trading? Well, that means we're going to be looking for opportunities to go short here on the dollar yen. And how can we do that? Well, we can look at levels of support and resistance on lower time frames. And I can guarantee you all these levels I'm pointing out are major levels on lower time frames like the 1 hour and 4 hour chart. So going further into this week, here on the dollar yen, we're going to be looking for opportunities to short this market at one of these levels of major structure on a lower time frame. And if the market pushes all the way down to the 105.5 level yet again, this is a place we can look for some very conservative counter trend opportunities. On the third test of this level, I would not expect it to hold hardly at all. We may see a very small bounce and then a continuation down. So really not looking for a trading opportunity here unless it is an extremely good one, even better than what we were looking for back here. Again, initial expectation is that we break into new lows. If we do that, the next place we're going to look for counter trend opportunities is 103.94. If we end up pushing up and do get above our previous resistance level, the first place we will take a look at for shorting opportunities is 108.25. And above that, if we break into a new uptrend, we can look for long opportunities all the way up to 110.30, which is going to be the first place we look for shorting opportunities upon the break into a new uptrend on the dollar yen. So let's go ahead and move on to our next pair now, which is going to be the Aussie dollar. Okay guys, so here on the Aussie dollar, I'll go ahead and put a screenshot up of our predictions from last week to the left hand side of your screen. What we were looking at here last week is a possible push off of the 0.7730 level. We thought we might find some resistance at 0.7802. The market pushed right above that level, but the next level of resistance we pointed out is right where the market's hovering around now at 0.7881. This was a level we said that we could see the market get into and possibly give us a trading opportunity to the short side. If we do get that opportunity, we would expect this market to get down to around the 0.7802 level once more. So that's our initial prediction here this week. Our trade idea for the Aussie dollar is looking for short trades right where the market is currently at 0.7881 on lower time frames, and quite possibly getting a move from here all the way back down to 0.7802. If that happens, 0.7802 is a great place to look for taking off secondary targets and possible long opportunities out of this pair. If we push below that level, we'll be looking yet again around the 0.775 all the way down to the 0.7730 level for possible long opportunities out of the Aussie dollar. If the market does not respect our analysis that 0.7881 should be resistance and instead pushes above it, we can look for some long opportunities all the way up to 0.795 and above that level at 0.80. Around that even handle number all the way up to 0.8023 will be the next zone of resistance we're looking for here on the Aussie dollar to push the market down. So again, just to briefly go over this once more, the Aussie dollar is currently in what we're considering a downtrend, reason being because we had this push down, push back up into a lower high, push down, breaking and closing below our previous lows. At this point, we're looking for that lower high to help us capture trend continuation out of the Aussie dollar. With that being our expectation, where the market is hovering around now, in my opinion, is a great place to start looking for some short opportunities here out of the Aussie dollar. And that's exactly what we're going to be doing throughout this week here on this pair. Let's go ahead and move on to our next pair, which will be the pound dollar. Here we are on the pound dollar, and on this chart, trend is extremely difficult to determine, right? I mean, we do have this previous low that was barely closed below, but then directly after being closed below, we got a nice hammer candle, and the market has pushed up since then. So what I would qualify this as being in is a period of consolidation, meaning we're not really expecting this market to continue in trend to the downside. We're also not really expecting this market to continue in trend to the upside. This is a good situation for us to only be trading around these major levels of structure. And when I say us, I mean us here at the trading channel, guys. So what I'm looking for is this market throughout this week to head up into the 1.4091 level. If this market can get up to that level, I'll be looking for shorting opportunities. So that's the initial prediction here on the pound dollar, is a move up to 1.409 and then a possible short opportunity from that level if we get that right kind of entry reason on a lower time frame. Now, this is one of the pairs where we had a losing trade this week. I told you guys we had 2 losing trades this week based on this analysis on these top 5 major pairs. This is one, and the dollar Swiss was another one. On this pair, we had a nice entry reason right in this area on a lower time frame, expecting this market to go down. maybe push all the way back down to this previous support level, but instead, as you can see, this market continued higher. We ended up losing that trade based on this analysis. But an important thing to note is instead of sitting here sulking about losing that trade, what did we do? Well, we came back with our next step in analysis, which is waiting on this market to push up to 1.4091 and give us an entry reason to go short. Now, if this market pushes up and we get some closes up here above our 1.390 level, then that level will act as support if we get a pullback into it. So those are our two initial predictions out of this pound dollar pair, the two things we're looking for first this week out of this pair. If we get a push even lower, we'll be looking at 1.375 as a possible long opportunity zone out of the pound dollar. And if we go lower than that, the 1.3597 level will be the next level of possible long trading opportunities. Pushing up, again, we're looking at the 1.409 level as resistance. And above that, we'll be looking right back here at these previous highs at around 1.4250 for our next level of possible resistance. And that's what we're looking at here on the pound dollar. Now we'll move on to our final pair, which will be the dollar Swiss. So here on the dollar Swiss, we've actually just broken into a possible trend reversal. And how do we know that? Well, hopefully these lines on the chart are not getting too confusing. Try not to pay attention to those at all. And let's just consider trend for a moment. We have a push down into a lower low, a lower high, a new lower low, and we have just now broken above that previous lower high, putting us into possible trend reversal here on the dollar Swiss. So with that being the case, what are we expecting? Well, we're expecting there to be a high probability that this market breaks into new highs above this previous high before breaking below this previous low. Because of this, we ended up taking a trading opportunity on this pair whenever we got back down into our blue line here at 0.9464. When we got there, we got a nice entry reason, expecting this market to head higher from that level, possibly even push up into our 0.9565 level. Instead, the market disagreed with that analysis, pushed down, and we've been stopped out on that trade. Now, what does that mean for us going forward? Well, we're still in an uptrend, right? We're still breaking into new highs. We still know our bias is to look for long trades until we break below this previous level of support. What do we have above this level of support? A major level of daily support. So what can we look for? Well, if this market gets down into 0.9401 this week, that's a place we'll be looking for some long opportunities. This is our likely scenario. Our major prediction on this pair is getting down into 0.9401 and going ahead and looking for some long opportunities for trend continuation out of this pair. And I really like this as a trading opportunity. So that's going to be our initial prediction. What else could we look for out of this pair? Well, if we don't quite make it down there, or if we do, if the market pushes up into new highs and we get into the 0.955 level, in that area is a level we can look for counter trend shorting opportunities out of this pair. And above that at 0.9684. Now, upon a further push down, then 0.9401, we can be looking around the 0.9274 level as a possible level of support out of the dollar Swiss. So I know that was brief, but that is what we're paying attention to here on the dollar Swiss. That's our breakdown of the top 5 major pairs. I hope you guys enjoyed this analysis. If you did, one, don't forget to be subscribed here to the trading channel so that you're alerted next time we come out with analysis like this. Also, if you're interested in investing in your Forex education, learning some more advanced techniques that we don't talk about here on YouTube, then feel free to check out thetradingchannel.net for some of our more advanced training programs and courses. Comment below with any questions or concerns. Be sure to leave a like on the video if you enjoyed it. I wish you guys the best of luck in your future trades, and I'll talk to you in the next video.